What's going on, guys? 360 Digital Closing Bell Week Ahead podcast here on this gorgeous Monday morning, October 19th, 2020. It's about 6:30 a.m. right now. As always, I am your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com. Available exclusively on YouTube for the last time. We'll be back on show Friday. Stuart Turley, how you doing?
It's a beautiful day in the neighborhood, and we had a busy weekend, an even busier week coming up.
Yeah, I mean, there was really obviously one headline that dominated it. Concho and ConocoPhillips do this merger on Friday. It was leaked this morning. It was announced. We will cover all things that deal, kind of from all sides, revisit what we thought was going to happen, visit what happened, and I think really what this means moving forward. I think there's a really big conversation to have there. Stu's got some wild stuff in the international news desk. We've got some stuff we got to cover in the crude oil markets coming up. I mean, there's some odd strength in the crude oil markets. But before all of that, guys, please, this show is brought to us by our friends at the world's greatest website, www.oilandgas360.com. Your place for all energy news, energy-related finance news, energy technology news. I mean, it's really, I like to consider it a one-stop shop where if you want to stay in tap with what's going on, not just with the U.S. shale patch, but also in the international and what you need to know. Because I think there's a lot of websites that give you everything. That's not what you want. You don't need everything. That's disgusting. You need, what do you need to know? That is key, and I think that's what here at Oil and Gas 360 we do a really, really good job of. So highly recommend checking us at www.oilandgas360.com. We also have numerous other podcasts on there, specifically the Energy 360 podcast, which is Stu interview of. We've actually kicked off a Women in Energy section of that, so it's really awesome. Stu, we've got two people coming up for that, right?
Yeah, shoot, it's Monday morning.
So I know we launched our first one with Laura Prang, an executive search over at Prang. So the next one we have coming up is Elizabeth Coleman, who's a former Texas Railroad Commissioner. Fascinating conversation. You can see a replay of her on our YouTube channel, Entercom. Subscribe.
And she's coming out Wednesday.
We've got to do some cutting on that. And then you can also check out our YouTube channel, Entercom YouTube, which has our daily energy market summaries, which honestly is more watched than this show. So if you're watching this, you probably also watch our live show. So thank you for watching that. We've been really exclusively on YouTube for this long form podcast, mostly because our podcast hosting platform sucks. And we need to move over. So we'll get that done this week, guys. I'm not too concerned about that. Anything else? We had any other clerical work, Stu? I know we have on the Energy 360 podcast. We have, who do we have coming up this week?
We have the new CEO of Ring.
Have we launched Steve Reese?
We will launch Steve Reese probably today or tomorrow. I'm excited.
Check out. That's great. State of the Midstream. I mean, I just learned a lot because I know really nothing about the midstream business as, how it fits into the energy finance market. Sure, I tell you that much, but how I know how it operates with all over my head.
And we have a bunch of big boys lined up, and we can go over them as we get closer, but some of them are very well known in the industry, and I'm pretty darn excited about them.
Well, it'll be fun. So check out all of that, the world's greatest website, www.oilandgas360.com. All right. I mean, I think, let's not beat around the bush. If you're listening to this, it's probably Monday or Tuesday, and then the biggest thing that's dropped is this ConocoPhillips transaction. I think there's some really interesting, not fallout, but things we can pull from this. But I think before we do that, I want to just kind of quickly run over the deal terms here and timeline. Remember, guys, on Friday, there was leak of a potential deal between ConocoPhillips and Chevron, and they finally this morning put ink to paper, making this official. Here's highlighted the deal terms: 1.6 shares of ConocoPhillips to each Concho shareholder. So it roughly works out to about a 14.65 premium based upon October 13 closing prices. According to I sat in on their webinar this morning. According to they create the largest independent oil and gas company with over 1.5 million BOE of oil production a day. They're expected to have over 500 million of cost savings by 2022. Concho's expected to generate about $600 million in Q3 cash flow. And CEO of Concho, Tim Leach, he's going to become the executive vice president of ConocoPhillips and president of Lower 48, and is also appointed to the board of directors. Woo! There's some other stuff. So to give you an idea, 1.2, it's only, they're going to do 1.5 million BOE per day. Concho does about what does Concho do? Like 300 barrels a day, 300,000 barrels a day. So, they're buying only like 30% more production. So it's pretty funny how these super majors, they all talk, we're not really heavily based in shit. But this guy they were doing 1.2 million barrels a day shale oil production. So it's kind of funny how everyone's moving away from shale, but then you actually dive into their numbers here. It makes me cackle. So, this answers a bunch of questions that we had and that were laid out for us on Friday. I think the first question we were wondering was, what's that premium going to be? Is it going to be all stock? Is there going to be cash? What's the premium? Well, it's an all stock deal, but it's a 15% premium, which is not bad. It's not bad. Is it the best deal for Concho? Well, we'll dive into no, but if you're going to sell out and if you're going to sell out at this point, and based upon the other deals that have gone on, it's not terrible. It's not a terrible premium. If you're ConocoPhillips, this is a no-brainer deal. This is exactly what you want. It basically allows you to create a almost BPX synergy where you have all of your onshore U.S. shale and onshore operations handled by now basically Concho, and you can take back to how do I manage my business from a holistic standpoint. You know what I mean? I always joke BPX is BP's loss leader. It's kind of funny. It's like the guy at diapers.com actually loses money on selling diapers, but he makes money on everything else. It's like all these, it's like BP and BPX. BPX is just their loss leader.
A loss leader. I like Michael Tanner's loss leader. Let's have a t-shirt.
It's true though, because when we dive into this, and this is what I got to take my socks off here, folks. It's just too much this morning.
Oh.
I got to put the slippers on. We don't need this. I walked my dog this morning. It's getting colder now. Anyone who's in Denver, that weather's turned. Thank goodness. So we'll put the slippers on here. So we got expected cost savings of over $500 million by 2022. Well, that screams two things to me. One, G&A. Whoop, gone. That's some jobs right there. Now that's also, they don't have 500 million of jobs. So, what this also allows them to do is spread their love a little bit. They already have some, ConocoPhillips, super majors have an odd, I don't want to say an odd, but they have a huge amount of physical inventory because you can always write that off in your taxes. We're just going to why pay taxes on it if I can just go out and buy a new fleet of trucks for my guys? Why do it? I can just go buy a couple dead workover rigs. So I can just, I'm sure ConocoPhillips has workover rigs themselves. That's how a lot of these companies have to spend their capex. They just think about it. Shell's got $13 billion sitting out since February on their thing. Of course, I'm sure they've got some stuff lying around.
So it's not working because of a power cord.
Yeah, the $13 billion power cord. So I think that's a lofty number though, which is why personally I think CEO of Concho Tim Leach is going to hate his new job in like 18 to 24 months. Like, come on, if I'm the CEO of basically a $10 billion company, I get bought out. Trust me, I am not taking a new position at this company. Throw me my shares. I want to go buy my time. I want to convert my timeshare in Vail to a full-time ownership, and I want to move and I'm going to go away. He now is basically put in charge of this merger, which, yes, he's get a nice little pay bump on this change of control because he's no longer the CEO. That's nice. We covered that on Friday. I think it's like 11 million for him. And he said that buys a lot of ski houses. That buys a lot of new skis.
Yes, it does. But Twitter feed you had mentioned had something funny about that 11 million. About them buying new houses.
Oh, I would highly recommend, guys, if you're not scrolling through Twitter. I was just reading through Twitter. One of the comments was, "Great, all these change of control packages. All these guys are going to buy homes outside of Midland." Well, I had to sneak in a little joke on the article this morning. It just cracks me up. Concho's, they sell out to a Houston-based company, and their slogan is Midland-based, Midland proud. Yeah, that office in Midland's going probably. So it just cracks me. Midland-based, Midland proud only goes so far. I texted that to one of my buddies who lived in Midland this morning. He was like, "I'm triggered." I had too much fun around here. But I mean, that's just where, I I'm trying to like come up with some fresh take, not fresh take, but I mean, I think it's an okay deal. I think it is what it is, Stu. Like,
it is, and you had mentioned in our pre-show that you think this could be changing the face of M&A.
Yeah, I think there's definitely a conversation to be had around. Okay, well now what does this mean going forward? And yep. I mean, yeah, we just go ahead and dive into it because I think, we ran this a couple times. If you're a follower of the Energy 360 podcast, we've talked to guys over in Inveris like Andrew Dittmer. He's an M&A expert over there. These guys follow this stuff every single day. We've been hearing and what has it been, Stu? Really since COVID hit, since really, we saw really depressed pricing, even not necessarily before negative pricing, but really around that point, April, May, June. What were we hearing? Consolidation. It's about to be a hot market. Things are going to be cheap. Well, I think I was on that gravy train because it made sense. You're talking stocks, everyone's stock is down 50%. So I think what a lot of people thought was everyone's stock's going to be down 50%. Large caps are going to see this as an opportunity to come in and buy small cap companies and turn themselves into large producers, bigger than they really are. Well, it's the opposite's really happening right now because Concho should be somebody who's buying. Concho, if you read my article on Oil and Gas 360, any baseball fans out there, Concho's like, they should be a buyer at the deadline. It's a playoff push. They need more starting pitching. They need they need a third starter so they can go out and have 3, boom, bang, boom, game 1, 2, 3. That's what they need. Instead, they sell off. And they do a fire sale. They say, we're tanking. And now, I don't begrudge them for doing that. But what that means is they looked at the landscape. Because trust me, they every good GM, and I don't know Tim Leach, I'm sure he's a smart cat, he probably looked at buying. And so you take a look at, okay, they're a pure Permian player. They do a lot of unconventional. So what are more pure player Permian unconventionals? I don't have to tell you the list. We all know who the list is. They looked at them, and whether they approached them or not, didn't like the valuations they were getting, even 50% discount, which does not bode well for our small cap friends. We love them because if Concho's not willing, if someone like Concho's not willing to get it on you, if someone like Devon and WPX are just going to merge with themselves, now they may be setting up to purchase some smaller ones, but if I think this completely kind of kills the idea of, we're going to have this really hot M&A market. All of these small caps are going to get swooped up and we're going to have 67. Well, no, because I think what this shown is, these companies are looking at these small cap companies. And I think they're saying when a dog's a dog, it just barks and you can't do anything about it. I mean, there's only so much you can do be creative with debt until it becomes, I don't like it. And especially, especially someone like Concho, who while they had an okay debt position, they probably didn't necessarily, they couldn't really go out and buy it. So it just, I think I'm the first to say I was on the gravy train, but I'm also the first to say I'm hopping off. And I think we're changing directions a little bit. I think there's a pivot happening. And I could be completely wrong, but
I think you're dead on right, Michael. I think
so
that
what do you think about this deal? I've ranted enough. What do you think?
Oh, I'm sitting here. I loved your article on 360 this morning. I read it, and it was just dead on about the key takeaways. I think that we are definitely upturned on what's going to happen with the mergers and acquisitions. Now, the royalty games coming up, that is just exploding. I mean, that is one part of this that we knew was going to go bonkers, but we didn't realize it was going to go this bonkers. Royalties.
Oh yeah, and we're late to the minerals game. We're 2 years too late. That wave is crescent. I'm all about. I liken investing to surfing. There's a half the battle is just catching it at the right time. You can have bad form, catch a wave at the right time, and kind of surf for a little bit. So you better to just catch. If you could be the best surfer in the world, that wave's already crest. Kelly Slater can't catch every. Well, maybe he can. Maybe Steve Cohen can nail every investment, but most of us can't. So there's a timing aspect to it. So sorry.
No, I love your analysis. Good job.
Yeah, and I know, we're going to have president of Entercom, Aaron Vanderford, on our daily show this afternoon. And I think what he's going to say is, I think he's going to have a little bit, I think, of a different take. I think he's going to say he's big on, and I linked to this. He talked about this in the Haynes and Boone call, which if you're not a part of the monthly energy tracker Haynes and Boone call, email me, mtanner@entercominc.com. Please, I will legitimately send you the link right now. It's probably the best coverage of just what's going on in the oil and gas industry from kind of a executive management law perspective. I mean, really, it's a 360 view, to be corny about it. He talked about this idea of merger of equals is going to become big, and I think that's what his take's going to be. His take is going to be, you're right. Obviously, this M&A market of acquiring is not shaping up, but we're now going to see we're going to now see the small cap link up and become a smallish cap. I don't know if I necessarily agree with that, but that very well could happen but what's clear is that these larger caps looking to grow don't like growth in terms of acquisitions. And when there's no capital available to go drill wells, you're left with no other option but to sell out. Now, you don't have to sell out. I think that's what's kind of sad. I think if there was any company that could weather the storm, it was Concho. They have manageable debt. They actually had some decent acreage in the Permian. It's not great, but it's okay.
Hey, in this market, decent's okay.
That's what I'm saying. Decent's okay. Having manageable debt's a great position to have. So, again, that's where the story, I think, behind the story is these small caps are not good. And I think we'll see what the fall. I could be swinging and missing at this, but I would be surprised if this kicked off another round of M&As. But we'll see. I hope so, because there's some. Wells Fargo puts out a research report. Their headline: Concho seems to be getting a quote bargain. Yeah, of course.
Yeah.
Because so it just makes me want, now, as we mentioned, leadership over there's got 44 million reasons why at Concho, why they'd love to have a change of control. But that's always going to be there. So, it's just a question of timing. When do they think the wave is crashed? They think they've missed the wave. Okay. And that's interesting because whether you agree with their position or not, they have the power to do the buying. Me and you aren't in the position. I can opine all I want. I'm just sitting behind a mic. I have zero control. They have the power. They got the keys. So what they're telling me is, and they're driving, we don't like the valuations. Well, great. Because the valuations suck. That's what I take from it, Stu.
All right.
But I think what we do, we'll cover it. We're going to hear a lot more come out. It's still 6:53, so we're going to see kind of where this, we're going to see where this, excuse me, where all this kind of shapes out. Today, stock's going to open here in about 24 or here in about 30-ish minutes. We'll see where it goes. Pre-market, I think Concho was up. I think the deal was obviously Conoco's stock price is probably going to be depressed a little bit, but don't read too much into that, especially initially. We'll see how the day plays out. But we'll cover all of this in our daily energy market summary exclusive on Intercom's YouTube channel. Subscribe. Do whatever makes the algorithms go nuts. But I think with that, Stu, you have anything more on this deal before we move on to the oil patch, to the rest of what's going on in the markets?
You covered it very well, and I think it's going to be the birth of something to watch, because we're in, I don't want to use the word uncharted territory, but it's going to really change up the landscape.
Yeah, I mean it'll be
interesting.
You could say that again. Woof woof. I think with that, let's go ahead and dive into the week that's coming up here in oil. Brought to us by Sandstone Capital Group. These guys do great research. Give them a call, 303-907-6825. They provide us with all the research. Got to tell them the podcast sent you. We love it. You call them. Just tell them the podcast sent you. Let's start with the international news desk, Stu. What do you got? I need a quick break here. I need some coffee.
This weekend was kind of crazy. First off, you've heard us say on the show, you and I have talked, everybody in the planet needs power. Let's elevate everybody out of poverty, use the cheapest kilowatt per hour, get the best for the planet to everybody. And our favorite country, India, has done a fabulous job doing that. It came out this morning that Nigeria is seeking private funding to close 2.5 billion in their energy electricity gap. And what that means is that they are going forth, and they have now surpassed India in the most number of people in poverty without power. So our hearts to go out to the Nigerian folks. Maybe we need to broker some conferences between India and Nigeria, but we really hope to keep watching that. They're trying, and hope they can continue to get people out of power. All right, moving on. Rystad came out with some really big numbers this morning with the UK CS, never to return above 2 million BOE per day. This is really a shocker. And the numbers that they came out with, Rystad prompted Rystad to revise its production forecast for the UK, now show that production will never again exceed the threshold of 2 million BOE per day, but instead reach a maximum 1.7 million. I mean, you take a look at Rystad, and Rystad numbers. I mean, now
we love them.
Unbelievable. I mean, this is going to be something. This goes back to our international feed with Aramco. So if the UK can't pump and become energy dependent, they're going to become energy dependent on Aramco again later on in the future. Something to watch there. Moving on. We have our buddies over in Libya. You got to love that. They hit over 500,000 barrels over the weekend. They know that they're on their way to going 900,000 barrels per day. And this is what OPEC cannot keep their puppy in control. They've got the biggest newspaper rolled up in the planet, and they still can't whack him in the nose. Articles on there. Tesla in Canada this article came out in Canada, has just launched their biggest battery storage called the Wind Charger. This project is very interesting. They're not giving us all the details, and I'm trying to get somebody on an interview. Michael, biggest problem with wind, when the wind ain't blowing, you ain't got no power. Okay, this big old battery farm, if you could see that to our podcast listeners, it charges within 2 hours, but I can't get anybody to tell me how long that will last. I mean,
45 seconds, probably.
Is this like an Apple iPhone, or it lasts a minute? Okay. And the last thing, Turkey, we had our gender reveal party last week. They have 2 articles. And the Tuna One gas pipeline is going to be really enhanced, helping get Turkey energy independent. But their gender reveal find is really up into that trillion BCD equivalent find. It is one of the biggest finds on the planet. So that'll be another one to watch. They are going to be emboldened to again start trouble in the Mediterranean. So keep watching for Turkey and trouble.
Yeah,
how's that for you?
You've been talking about these peace deals, and it doesn't look like peace is coming.
We got 2 more that I have sources that are saying are there. They revolve around fighting against, bad verbiage, countering Turkey.
Oh, okay.
So I have 2 more. I was hoping they were coming in last week, so we'll see how this week rolls around. I think that was pretty good on the international news desk.
No, there's a lot of interesting things that are happening. It's really been moving oil markets, for us. This Libyan, specifically stuff on this Libyan and OPEC production. I mean, I think we all knew that was what was happening, but I mean, really, when you see a headline, that's what not only moves the markets, but it's what moves the algos, because it's a lot of news-based trade, news-based sentiment trading. So, I would stay tuned for everything on the international news desk. Stu's been doing a really great job of covering everything on that. When we move into just, currently oil sitting, we're 41 even, 40.99 as we trade here about, we're straight up 7:00 now. So about 30 minutes till the pit opens here. I mean, over the past, I think 3 days, there's been some odd strength in oil. And I say that because I'm not sure where it's coming from. I think there's some long-term supply issues that are really hampering this oil price. But I think people are, I think that the short-term sentiment of we're going to be in locked. I think people are. I think this is a sign that I don't think people are taking, and not taking. I don't think people are. I don't think traders are seeing lockdowns happening in the United States, because this, I think, shows a lot more strength than I would have thought. I mean, I had us down in the 37s at the end of the week. That's why I would have pegged us if you had guessed me. I mean, I was bearish last week, and I was kind of right early in the week, and then I was wrong. The last 3 days showed wild strength, and great, good. I think we look at some key levels. I still think 39.15 is a level that we can hit quickly. So don't be shocked if we see below 40, and specifically it's 39.38. But in between that, I like 40 even. I like 40.25 to get long. I like 40.62 if you're trying to get long. Point of control for last week was basically where we're trading out now, 40.98. So, and 1, 2, 3, 4. I mean, there's 6. 1, 2, 3. 4 out of the 6 days in my view right now, the past 6 trading sessions, as their point of control, 40.98. So there's strength in oil at that $41 level. And I'm not necessarily sure why. I think it's just showing that the long-term supply issues of oversupply by OPEC, uncertainty with what's going to happen with compensatory cuts and what's going to happen in the U.S. shale. Are we going to see oil come back online? I think that they're brushing them off a little bit and saying, hey, I think that we're only going to start consuming more oil as we continue to kind of come back. I think that's the sentiment. And as we continue to, I don't want to say brush off coronavirus, but I think what they're saying is, people just got to get back to their lives. And right now people use oil. So that's where I think you're seeing the differentials. I mean, we're only at we're we're at $1.60, we're at $1.80 spread on the front month and back month. That's a flat curve, Stu. That's a flat curve. So, in terms of what's happening with oil, it is showing strength. I think on the natural gas side, I mean, it's really volatile right now. I mean, right now it's a lot of news driven events. We're still coming back from some of the Hurricane Delta stuff. I think really what happened, really what this market's looking for is two things: storage levels and weather. So I think we've attacked the first one. Storage levels are beginning to come back into the range, which what we like with what we like. We saw 46 BCF draw or build. Hopefully we see somewhere in the, probably 15 to 25 range, but knowing us, we'll probably see somewhere in that. I would say maybe 25 to 35, but it would be nice if we could see a little below that. Concho, just to cut in here, they're up 2% or 2.5% extended hours. Conoco is up 0.5 percentage points after hours off the deal. So markets initially liked this deal. Sorry, I just had to see that. Kramer's talking on CNBC right now. I can't imagine what his brilliant analysis is talking about.
Let's get him on the show.
Let's get him on the show. Let's do it. Okay. Natural gas, we keep hearing 350. We keep hearing $4 gas. I mean, maybe $4 gas is a little much, but I mean, we keep hearing gas. I mean, right now that back end of the curve is $3.06, too. That's October 2021. I don't see where's 350. Where's this 350 that people now? I know as our weather begins to turn, as we begin to draw from storage, we're going to see prices rise.
Right.
Now, do I think that's going to?
I'm at 320.
You're at 320.
And the thing is that we have not even begun to calculate in the lack of natural gas coming out of the Permian. There's a change coming in on supply out of Canada. They just had a bunch of things happening there. And so I think there's still things coming around the corner that are going to affect that.
Yeah, so. No, I agree. So I think, I think all that is to say, I think oil is showing strength. I'm not sure where natural gas stands because I think we need to wait till we get a little into winter. As I mentioned, the second thing you got to worry about is weather. And, again, follow the Haynes & Boone Energy Tracker because Matt Marshall from Aegis did a great job of going over, hey, if this is even they're bullish on natural gas. Their analysis shows it doesn't even have to be in the top 5 coldest weather or coldest winters before us to probably see 350 gas. So, I mean, they're bullish and guys, they do this for a living. So I'm probably just blowing smoke. They do this for a living.
Yeah, that's a fabulous presentation by Matt Marshall.
Yeah, he's a brilliant cat. We also had him on an Energy 360 podcast. Check it out, oilandgas360.com. Energy expert insights. But yeah, I mean, I think when you look forward this week, I think you're going to see oil. I'm probably flat on oil. I mean, who knows what? I mean, we'll see what happens. I think right now we're living off news-driven events. I think if stuff comes out on these peace deals and we see some reduction and we see some tension, we might see some of these prices depress a little bit. I think if we see something crazy on crude oil inventories, if we see a fat build in I know we expected to see probably a production cut because of Hurricane Delta, but if we happen to see then a build, an abnormal build in inventories, who knows? Could drive markets. Yeah, we can see $39, $38. As we set to open the markets here, futures markets are up. NASDAQ an implied open of about 0.8%. The S&P will be up about 12 points, or what they call the implied open. I think this is going to be earnings begin to fall out. We're going to start seeing a lot more. I think that's another thing we're going to start seeing is some of these earnings come in. I think when we look at, let's pull up a calendar here, Stu. Q3 earnings, oil and gas. Let's see. That's Q2.
It's Monday.
It is Monday. We will get a earnings calendar up quickly. I'll find one here. I don't think there's anybody big. I think it's just oilfield service this week, and it's the sector I know the least much about. So we'll cover it. It'll be good. We missing anything? So I think we did. I think this has been a good show. What else we got? We done?
I think we got a busy week.
I think we have a busy week. So again, with that, we're going to let you guys get out of here, get back to work. Thank you for checking out the 360 Digital Closing Bell Week Ahead podcast. We will see you guys this afternoon, not live, but on YouTube for our 2 p.m. daily energy market summary. Subscribe to our YouTube channel. See you then.